All right, good morning. It's Thursday, April 11th, 2019. This is Stock Market Today presented by Chaikin Analytics. My name is Nick Webb. Normally it's Dan Russo here today, but today, still on his honeymoon, wishing him well. You will have me for the remainder of this week, so bear with me. So let's start with the market. What happened? Well, there was the large cap index, the S&P 500 had a pretty moderate increase, but it was great because the prior 2 days had been down days. You wanted to break that trend, and it did. What happened is the market got some fairly benign economic news that we'll cover later, and then around 10:30 it got some more, and that allowed it to stay positive pretty much the whole day. Of note, though, the small caps were up very strongly. They were up 1.4% during the day, which is great. It was, and we'll talk about that later as well, because quite a significant perk up for them. Resistance for the S&P still remains around 2950. We're inching ever closer to it. So it'll be interesting to see if we can bounce off, or not bounce off that, but break through that. Clearly, earnings season is upon us. Tomorrow starts kind of the official kickoff, if you will, although I did include an earnings slide for this show. But that's going to be the catalyst that either takes us higher or lower, I believe, because right now it's a kind of dismal-looking earnings season with negative growth, earnings growth forecast. Companies and analysts have been writing down the estimates for the last quarter. So we're already into minus 4% growth or negative growth, and we'll see where that takes us. Good news is that money flow continues to flow into the market as long-term yields come down. I think we're the only game in town. The market really is attracting institutional money, and so let's see what happens. So in a minute, let's describe the market. Well, as we said, it drifted slightly higher throughout the day. Small caps really had a good day, depending on which index you look at. It was either 1.37 or 1.45, but legitimately, it felt like they were perking up. There's a couple things that people should keep in their mind, because yesterday, oil supply all of a sudden cropped into focus. And while the U.S. does produce the vast majority of what we consume, it's important to sort of keep in mind what's going on in the international markets, because obviously our crude oil prices are going to be affected by that. There's two countries, Libya and Venezuela, that are just crimping crude supplies. Both of them are in OPEC. Venezuela, I'm sure you've read the blackouts, riots, a regime that probably is going to be changed or should be changed. So they have the blackouts apparently have shut down crude supplies there. Libya, it's the same situation where there's a country in turmoil. There is a rebel organization that has made significant moves on the country, and so oil supply there has really dried up. In addition, there was a report yesterday that gasoline that we drive, inventories have really shrunk. So just keep that in mind, because that could be a pressure point that comes out in a bit. Fed meeting notes indicate the Fed is happy with the current strategy. They haven't been increasing Fed funds rates this year and really don't expect to. They think they've got inflation under control. Probably the concern would be that they do see the economy slowing. So that was the one sort of sour note out of the meeting notes. Real estate was bullish. Is it bullish? Could it be bullish? Well, the fundamentals are in place. There's a strong economy, full employment, kind of see a little bit of wage gains and income gains happening. And long-term rates have pushed lower. All these things are very bullish for real estate. So our stock of the day, again, this is not a stock recommendation. It's a stock that's pulled out of by our computer algorithm and it takes a look at a stock that they find interesting. And so here's we just talked about real estate, so it's very apropos that they pulled out MI Homes. You can see that we rate it very bullish. And let's take a little moment to sort of take a look at the components. The Chaikin Power Gauge breaks into 4 primary components: financials, which is kind of like the value-based metrics, things like price to sales, cash flow, long-term debt to equity. We have it, so that's part of our model. Another part of our model is earnings. Obviously, we not only take a look at growth, but we take a look at whether the company beats earnings surprise, what the trend is. You know, there's a number of factors that go in there. Technicals, actually a small part of the model, but it's still there. Looks at relative strength, price trends, volume, etc. And then experts, those are things like analysts and insider trading. So when you add that all up for MI Homes, it rates it as very bullish. And you can see if you want to read the chart the way Chaikin reads the chart, start at the top left, very bullish. So you've got, that's what Chaikin says. You can then go all the way to the bottom, take a look at the trend line of our ratings, and you can see we've been bullish or very bullish on this company since January. And it's been a relatively good call. It's been relatively successful over the first quarter into the second. You can see there's a relative strength breakout that's just been signaled for this stock. So again, that's a really good sign. But again, going up from that trend line, the next thing you do is you look at relative strength. What does the market think? So is the company outperforming all its peers? And you can see it's broken into the green, not dramatically, but it seems like it's now, at least for the last few weeks, outperforming the market. That's a good sign. Last thing we look at immediately is the money flow, and you can see it's turned green. So institutional money, which is what money flow is, it's a proxy for that. So institutional money is flowing into the stock. So summing it all up, Chaikin likes the stock, market likes the stock, and the pros like the stock. That's a good sign for this stock. So relatively solid pick. The only downside is if you look at overbought, oversold, kind of looks like it's gotten into the overbought, maybe something to keep an eye on. And as the market pulls back, or if there's slight correction, this would be an interesting stock to own. So where have the sectors gone? You can see energy cropped up now. We talked about some of the factors driving energy, but with crude prices and gasoline prices on the upswing, that's a good momentum driver for energy. You can see industrials down there at the bottom. So that tends to be the lay of the land. Nothing earth-shattering in terms of the movements, pretty small movements. Communication sector, which has been long sort of underperforming, seems like they're getting their act together. Discretionary, staples, and technology all sort of having relatively good last 5 days. So out of the sectors, we pull one industry, and that's going to be transportation services. You can see that has not been an outperformer. As a matter of fact, it's underperformed the S&P by a pretty substantial margin over the last 6 months. However, we've got a relatively strong power bar ratio going forward. So we've got 11 stocks that are rated bullish, and we've got 5 stocks that are rated bearish. So, when you weigh that sort of ratio, and granted, there's a lot that are neutral, but we discard those. We just look at bullish versus bearish, and that's a pretty solid ratio. And they're currently ranked 13 out of 21 subsectors. Of those, within that transportation sector, there's one of the stocks that they pulled out was Delta Airlines. They reported earnings yesterday. It was a good earnings report. You can see up at the top of the chart, they came in at 96 cents. The estimate was for 90 cents, so that's a beat. And the market rewarded them with a pretty sizable gain. You can see we've only just turned bearish on or bullish on Delta. So, it's out there. It's something to keep an eye on. It's an interesting stock. See where it goes from here. So what's trending and why? Well, there's some big price movements. Conagra is being purchased by First American Trust. They announced that yesterday. Obviously, anytime you've got a merger, the purchasee, the acquired company, has a nice little pop in the stock. Conagra, no different. Discovery, the network, the television network, had two solid announcements yesterday. First, they had reached agreement with YouTube TV for distribution. That's a good sign. And then secondly, they're launching a new network. And so see where that goes. But they seem to be on the move. Kroger has a new management team. Market seems to like it. So they took off as well. On the downside, Amerisource, it just has been downgraded, and so the market reacted to that. You're going to see a lot of that in the next month as earnings season happens. Basically, companies report. They provide some forward-looking guidance. Analysts read into that and oftentimes update their estimates and their rating on the stock. So not surprising that this is happening now. Humana, they've been in front of Congress the last couple days, and I think this is just a fallout from that. And so they've gone through a little rough time. That they've taken a beating in Congress, along with a lot of the other healthcare providers. So I've added this slide back, surprises and who's reporting today. You can see we already talked about Delta Airlines. They had a nice beat. Bed Bath & Beyond. So, a lot of times you hear the death of retail. Well, Bed Bath & Beyond is still alive and kicking. They beat estimates by 9 cents. That's a pretty sizable beat. So over on the right-hand side, you can see those are the companies that are reporting today. This will be the last day that this chart or this matrix looks fairly empty. You can see there's a couple that are reporting before the market opens. So a couple quick notes about the market overall, because it's had a nice run. You can see at the bottom chart, the S&P has been in the steady uptick, and not surprising, there's been more advancers than decliners. As a matter of fact, there's 77, almost 78% are above their 50-day average. What's notable about that is 50 days now does not include the big move forward. So this would be a time where you would expect to see some of the that ratio to go down, but it's still hanging up there strong, which means there's good breadth in the market. A lot of companies are making new highs and hitting, well, certainly beating their 50-day averages. We talked about it earlier in the show. It was a good day for small caps. Are they finally waking up? This is a chart that compares the Russell 2000 with the S&P 500. So when the chart up top starts going up, that means small caps are outperforming. You can see they did that exactly March through sort of August of last year. And then since that time, with the exception of February and March, really have had a dismal sleep. So are they waking up? It's too early to call that, but it was a good day for them yesterday, and it kind of looks like they've bounced off that low in terms of relative performance. So keep an eye on this space. It'll be interesting to see how that goes over time. So we're coming to an end of today's stock market today. One thing that always is good as a companion product is PowerFeed. Basically, it allows you to follow along. You'll get the email. And a lot of these charts that we use in this broadcast come from Stock Market Today. And so go to chaikinanalytics.com/today and just sign up. All you have to do is give an email. It is free. We don't charge for it. And like I said, it comes once a day, and then there's a weekend edition. Thanks a lot. Bye-bye.